Hey everyone, Eddie Campos here with REMAX Preferred Associates. It's Coffee with Eddie, episode 82. And today we're going to talk about what you might want to be thinking about over the course of the next 12 to 18 months with an election year. Again, I've been doing some homework for our meeting today, so just in generality, so this was about an hour ago, the Dow Jones was at 25,782. Historically, in October of 2004, it was at 10,350. The NASDAQ today is at 7,810, and historically, 2004 of October, 1,874. S&P 500, it's at 2,800 today, was at 1,100 today. The stock market's a scary place. These are some dramatic changes for the better, but there's talk of recession, there's talk of, or not talk, but there is an election coming. How do I take care of myself now within the next 12 to 18 months, knowing that there's an election coming? What impact is that going to have on my money?
Traditionally, in an election year, there's a lot more volatility, right? Because the market does not like uncertainty, and a potential new president causes a lot of uncertainty. The policies they're going to put in place, the people they're going to appoint, the market doesn't like that. So traditionally, it's volatile.
Yeah, tax plans change.
Tax plans change, healthcare changes, everything changes typically. So what I'm telling people in the next 12 to 18 months is I would be defensive, okay? I don't think it's time to get out entirely, but you need to be looking at what you have and making sure that in a range of possibilities, which is what an election year presents, that you're comfortable with every single aspect of that range. And if you're not, I would highly encourage people to get things in a position where they are comfortable with it.
So, kind of as a little side note then, so let's say somebody does want to be a little more defensive. They say, yeah, I hear everything you're saying, but I'm still a little nervous. I'd like to turn some of this into cash, at least for the time being. Is there a cost for them to make those kinds of changes?
Depends on the firm.
Okay.
Oftentimes with us, no, there's not. There's actually strategies, a lot of people aren't aware, but they're linked to the market. So if the market continues to go up, you will participate in that gain, but if it decides to go down or ends up going that way, you don't take any of the losses. Now, those strategies exist, they're out there, and a lot of people just don't know about them. So
that's one of those things where you could be a little bit more defensive without totally bailing.
Absolutely, yeah. You could guarantee you don't take a loss, but if the market goes up, you're gonna participate in that gain.
So let's say today somebody's listening to us and watching us on YouTube or my Facebook page, and they're thinking, you know what, I've been holding off, I've been a little nervous, I feel a little bit better about this. Is this a good time for them to jump in?
Jump into the market?
Yeah.
If they're aware of the risk, absolutely. I think that we're definitely towards the top, highest it's ever been, longest bull market we've ever seen. So I'm not sure this is the opportune time, but I think if someone is wanting to get in the game, absolutely now is a good time to do so.
So historically, we've seen a lot of positive gains through time. So I think if someone were interested in getting into the market, they can definitely see like, man, we've come a long way in 15 years compared to where we are today.
Yeah, I mean, traditionally buy low, sell high, right? If someone jumped in today, they would be buying high.
Yeah.
Doesn't mean there's not opportunity to continue to grow, but you just need to understand, hey, 15 years ago would have been a better time to get in the game as opposed to today.
But at the same time, I think it offers maybe some comfort to know that historically, since the beginning of investing, even though there have been some chinks in the armor, sometimes some big potholes in the street, things have continued to progress and get better.
Yeah, one thing I would say to that though, and a lot of people aren't aware of this, but there's an index you did not mention called the Nikkei, and it's Japan's stock market. And in the late 80s, early 90s, that was at 50,000, and today it's at 26. So there is evidence in our world that things don't always recover, things don't always go up, okay? So I think, again, you have to be comfortable with the risk you're taking. I would encourage you to explore all of your options, reach out to someone that has access to all the options so that the next 12 to 18 months, you don't have an outcome that you weren't prepared for.
So as a final note, is insurance a place for people to invest in, or is it solely just for protection?
It can be, yeah. Insurance has come a long way, just like everything in the last 15 years. There are opportunities available exclusively through insurance companies where you can protect from loss and capture upside gain, but you're not gonna be able to find that on an E-Trade account or on your own. You're gonna need to talk to an independent, comprehensive advisor to get access to those.
Got it. Thank you for tuning in to Coffee with Eddie and our conversation with Daniel Miller with TransAmerica Financial. If you'd like to see more, please tune in to our YouTube page or find me on Facebook.